Welcome back to the Curiosity Wiki channel. The place where you will find the most interesting curiosities and everything you need to know to have a successful life. Hey, if you're here, don't forget to subscribe to the Curiosity Wiki YouTube channel. Activate the bell to be the first to see the new videos. Who is the world's fastest billionaire? While Warren Buffett took 55 years to become a billionaire, Jay Walker achieved this title in just a year. When he established Priceline.com, his net worth increased from $0 to billions instantly. This, however, was not sustainable, and when success left him, his net worth collapsed as well. But Warren Buffett remains at the top of the list and does not appear to be going anywhere anytime soon. This is the kind of fortune you want to amass. It's not easy to make money. It's competitive and cutthroat, and you're condemned to fail if you don't follow the rules. The problem with most individuals is that they may work hard their entire life, but still end up destitute at the end. Because they don't know how to make additional money from their tiny fortune. To put it another way, they have no idea how to invest. Assume you've put money aside and now have $1,000 in your bank account. This is significant because more than 70% of people do not have even $1,000 in their bank account. So instead of wasting your money on another useless device or a pair of shoes that you will wear once, how about investing it? But how do you put your first $1,000 to work for you? Do you put your money into real estate or the stock market? What kind of stocks do you invest in? Is $1,000 sufficient to begin investing? We'll respond to all of your inquiries and more. So, give this video a thumbs up and let's get this started. Consider the following scenario to better understand what investing is and how it works. Let's imagine you've worked hard and saved $300,000. You can go to a Ferrari dealership and buy a premium car while boasting about your accomplishments. You could also buy a house and rent it. You'll get at least $500 every month. You can sell it and regain your initial investment if you decide you no longer wish to get that $500 monthly income. Indeed, the value of your investment may rise, allowing you to sell it for a bigger profit. And that is how money is made. However, real estate cannot be purchased for €1,000. That isn't even enough for an advance payment, but that doesn't mean you can't put that money to work for you and see it grow. The most convenient option is to put it in a savings account and collect interest, but why would the bank pay you to keep your money in the bank? Isn't it more appropriate for them to charge you instead? No. The bank, you see, will take your money and lend it to someone else at a higher interest rate, with a portion of the profit going to you. That is, in a nutshell, how banks operate. The only difficulty with this method is that the deposit account's interest rate is so low that it's not worth it. You'll probably obtain a rate of 0.8% at the most. Which means that if you put $1,000 into a savings account now, you'll gain $8 more in a year. Which is quite low, because the Fed targets a rate of inflation of 2% to 3%, which implies that if you don't obtain at least 2% or 3%, the real value of that $1,000 will degrade, allowing you to buy less things each year. But why are deposit account interest rates so low? Because interest rates are low this year as a result of the pandemic, the Fed is encouraging everyone to borrow and spend. Once we're out of the crisis, the Fed will hike interest rates to 1.25% or perhaps 3% in a year or two, which implies savings account interest rates will rise as well. Purchasing government bonds is the second alternative. A government bond is a government-issued asset that is used to raise funds for government spending. Let's imagine the government wants to build a school, but lacks the funds to do so. Instead, it publishes a piece of paper stating that whoever has this title, government owes him this amount of money plus interest. Because interest rates are exceptionally low this year, government bond rates are less than 1%, but when interest rates were high 2 years ago, government bond rates were as high as 3%, which is not bad because government bonds are the safest investment you can make. Any investment entails some level of risk. What are the possibilities that the US government would fail on their loan? The entire US economy would have to go bankrupt for the US government to become insolvent. This is why US bonds are regarded as the world's safest investment. However, if you want a larger rate of return, such as 10%, 20%, or 30%, you might consider investing in the stock market. For example, Amazon's stock has increased by more than 80% this year. Google's stock has increased by about 30%. Tesla's stock is up 721%. Yes, you heard it right, 721%. So, why would anyone invest anywhere else when they can double or triple their money in the stock market? Risk is the answer. There isn't much risk when it comes to government bonds, for example. In reality, it's relatively risk-free. However, there is a possibility of a corporation going bankrupt when it comes to individual enterprises. The company may launch a product, and if the public does not like it, the company will go bankrupt. Apple is a well-established corporation, with a significantly lower risk of failure than Tesla. You must decide for yourself how much risk you can tolerate without going insane. If that $1,000 is all you have left, then risking it all isn't the best idea, because circumstances could change drastically, and you could lose the most of it. Investing in an index is one option for investors to reduce their risk in the stock market. The most well-known is the S&P 500, which tracks the top 500 U.S. companies. An index fund would essentially invest in these corporations. Some of these businesses will undoubtedly fail, while others will thrive. According to historical data, the S&P 500's average rate of return during the 1920s has been around 10%. This means that purchasing a share of these index funds entails purchasing a little fraction of the top 500 companies in the United States. Our favorites index funds are VU, VIFAX, and Vidasax are three of them. They're all great, and they all invest in the same companies. However, how do you go about purchasing shares in these index funds? Where do you even begin? To begin, you'll need to locate a broker who is licensed to sell stocks. There was always someone in the past, you just had to pick up the phone and ask them to sell you some shares. Do you remember the movie The Wolf of Wall Street? He'd call folks all day long, attempting to sell them worthless shares. But, thankfully, it is the year 2021, and things are much better and easier. Brokerage firms have developed apps that allow you to purchase stocks from the convenience of your smartphone. You only need to download one of those apps and join up to begin investing right now. We've attempted to keep this video as straightforward as possible, so that anyone interested in investing may get started right away. Frequently, you want to begin investing but have a lot of questions. You begin Googling about it, become fatigued after a while, and eventually quit up, only to try again a few months later. So in this video, we attempted to answer all of your questions. Thank you for watching this Curiosity Wiki video. If you like our videos, don't forget to subscribe, like and share.